mode.
Hello everyone, this is Teddy Kekstadt from Forex Trading Unlocked, and we're here with a Forex market breakdown for you today. And we're going to talk about a couple of the major currency crosses versus the dollar. And then we're going to first get you the disclaimer to let you know that this webinar is for illustrative purposes only. And now with that, let's get to our economic calendar. So the currency crosses that we're going to talk about today is the US dollar yen, the US dollar Swiss, the euro US dollar, and the British pound US dollar. Today we have for the pound Boris Johnson's speech, and then tomorrow we have for the euro retail sales, and also for the US dollar we have an ISM number. And then on Friday we have for the US dollar also the unemployment number. So of these numbers, really the only one that kind of sticks out is the euro retail sales number. The Swiss as well as the EU have obviously been downgrading their economy and expectations, but they also just reduced their forecast once again for growth just a few days ago. So this retail sales number will be interesting to see if that has any impact on the euro. Now, for those of you that are watching the dollar index, which if you're a Forex currency trader, you should always be paying attention to, you know that the dollar index is pressing highs again. However, we're starting to see a little bit of divergence, and we'll look to see what's going on with those major currencies. And that's when we get through that, you'll understand why I'm saying that it's an interesting little paradigm going on right now. We have the Swiss, which is at parity, and a couple other things to talk about. So with that, let's go to our first chart. So here we have the euro US dollar, which this is just a chart from last night, and as you can see, the market has been trending lower, and yesterday the market set a newer low to start the week off. But at the same token, it reversed gears and settled very positive. It set a piercing line candlestick formation right there, and currently the market has come back off its close from yesterday and is slightly lower, but with the strong dollar index today, the euro actually is only slightly lower, which is very interesting. Now if you look at these different colored lines here, we have the downward sloping blue line, which is our channel, and as you can see that yesterday's low is kind of buffering down the lower boundary of the channel going lower. Does that mean that we're going to have a rally back up to that blue line? Not necessarily, but let's look at some of these numbers that we have here. So that last lower move high, you can see the first yellow line at $1.1111. It's a nice series of ones there, easy to remember. That is our first major upside pivot point. Any type of rally, if the market was to get above there, would be signaling all kinds of strength should it take out that level. First of all, downward sloping blue line would no longer be resistance, which should be one major thing, which would be mean the euro US dollar would already be reversing gears. So is that going to happen? Well, let's talk about the fundamental aspect of what's going on here. So as far as the numbers that are coming out, like I said, retail sales come out for the euro tomorrow. Is it really going to impact this market? Well, I think as far as the economic direction for the EU, it'll be very helpful as a guide, whether it reinforces their current consensus or goes against it, we'll see. But I don't think it's going to set a trend. So right now we have a little signal that did occur yesterday. And while the US dollar index is pressing the highs, it seems like this major currency, the euro, which is one of the biggest weights in the dollar index, isn't really reacting to that bullish US dollar. So now the fact that the dollar index is on highs means that at any time, obviously, like in any market, you can have a turn, but the trend is your friend. So for right now, that any of you bulls and bears, you should take that into account. So for you bears, you're on the right side, but you're also buffering the extremes of the lows. Now let's look at these other lines that we have here, centering it right around where the market is trading right now. So where our piercing line is, we have the low from yesterday, and we have a couple strike prices here that we're looking at here. We have the 10 109.75. We have the 109 quarter and the 108.75 lines. Now, what does that mean? So these areas right here are kind of containing the current new low, as well as the median of where the trading has been for the last week, actually. So for range traders, if you're looking to see, and here's the one thing you got to take into account, is what is the volatility factor? So the euro US dollar has obviously been trending lower since the beginning of the summer and is now pressing the lows. But look at how much it's actually moved. The high is only just above $1.14, and then yesterday we just probed lower into this lower 109 territory. Now, historically speaking, down from 109.5 down to 108.5, the euro US dollar typically has found support no matter what the conditions. And since the sky is not really falling right now, and this is all just basically, you know, a trend obviously that has been in motion now for months, I think that you have to kind of go with how it's been moving. And since we're pushing the lower boundary of the channel, odds are just by attrition, not that we're going to keep on going lower, or excuse me, go higher instead of rally in motion, it's a good time for some digestion. So if you look at these green lines here, these are kind of your pivot points and strikes to look at. And as you can see, you had a previous low, two lows actually that had occurred in the month of September. So that would be the 109.75 and the 109 a quarter green pivot lines right here. So those are two good areas to trade against. So if you are bearish, obviously the upper 109.75 would be probably one of your first low for a week shorts. I would say that would be a good area to use as your boundary for risk. And then remember, you have the downward sloping blue line that's coming in here. So as time moves over the next week or so, that 109.75 becomes more solid because of it's by attrition and time it's coming into that downward sloping resistance. So our key pivot points to look for right now is basically key off of yesterday's low, I would say, for your bulls, because any failure there, one, means newer move lows. Now, we have just recently made a lower move high in the middle of September, and now here we are starting off October, where we had planted a brand new lower move low. Now be careful with this. Yesterday was the first day of the new month. Now a lot of times when markets establish a new high or a new low, they're trending into that first day, you can get a lot of reversing of gears around that couple day period as you start off the month. So today, right now, the euro US dollar is slightly lower, but it's only a little bit lower compared to the high and the close of yesterday. So if the euro US dollar falls out of bed and takes out that low, then look out below. All you bulls out there, I think you really need to hang on and wait for a true buy signal. Right now we have a short-term one that occurred yesterday, and obviously if you look at other indicators, you would see that the euro US dollar appears to be oversold, but that's when it becomes very dangerous. This is when the bears can really press and add to their profits. So I expect to see a lot of volatility, more of a technical trade, excuse me, over the next couple sessions, because of the fact that we only have a few numbers that really are going to matter, and most of them are for the US dollar as we come into the end of the week, especially on Friday with employment. So over the next couple days, the range traders might have a really good chance at trading these three green pivots here, just because of the fact that the bulls and bears are going to be grappling for direction, and we may have to see one of those unemployment big volatility spike days. So sometime between, now we're not trying to pick a bottom or a top, but never try and do that, but if we are in a bottoming phase, somewhere between yesterday's new low and Friday's unemployment number, I think you're going to see whether you're going to have that, who's going to win the fight. If we're going to get a rally, which then starts to challenge the downward sloping resistance line, or whether we're going to fail and make new lows and continue to drive this market lower. So also, remember we talked about the dollar index. Watch the dollar index for dollar strength. If you start to see a major pullback in the dollar index or a sell-off there, which could happen with tomorrow's ISM number and definitely on Friday's unemployment number, something like that would have the euro most likely get a bullish surge, not necessarily a change in trend, but especially if it's sideways and contained over the next day or so, you look for a potential head fake, or especially if there's a spike low, it could be like a balloon underwater, one of those kinds of days. So unemployment is one of those days. Sometimes they're not events, but then there's days where it's going to take the market really hard one way really quickly in the morning, right off the number, and then there'll be a knee jerk so fast that it goes the other way and then sets a new trend actually for usually a couple sessions and follow through. So all right, with that, we've looked at our pivots, and definitely look for, if you get a breach of this 109.75 and a breach of that downward sloping resistance, then I would say we definitely have a nice little trend to the upside targeting that 111 area. And then for longer term, any trading above there would go towards that 112.49. And those are areas that the reason they're very bullish is because the market's been in a sideways trade for the past year, and only over the past few months has it been pressing the lower end of that sideways extreme. And also look at the numbers, the range just in the past 5 months has been nothing more than just over $5, not a very big range for a big currency such as this. So with that, let's go to our next chart, the British pound US dollar. So on the same side of the pond over there, and remember that the pound and the euro are also still dealing with Brexit. So part of the euro weakness may also be because of the fact that there's no coming to terms yet with Brexit. Now, we mentioned in our, when we talked about the economic calendar, that Boris Johnson is speaking today, and now what's interesting is that the pound today is slightly lower than it was yesterday, and it's planted a new low and settled positive, as you can see on this chart here. And then last night it started to trade a little bit lower again. Now it's basically where it is right now on this chart again today, and we will probably see, I think, a little bit of digestion here, because we have to see how Boris's speech gets interpolated, if you will, by the rest of the EU and the UK and the rest of the globe, as far as if it's going to impact the currency direction. So with that, I think we use yesterday's low as our new guide. And if you take the low from the beginning of September and use yesterday's extreme new lower move low or higher move low on the longer term, if that support holds, then obviously we use that low as our downside pivot. Now what's interesting about that is if you look at the yellow lines here, we have $1.2311 and $1.2582 at the top. The upper one, if we get a rally back above there, then that really means that this pound US dollar from when Boris Johnson came in to become prime minister a couple months ago, that this deal is not only just a big deal, but it is coming to fruition. Now, if you notice at the end of the chart there, by where the pricing is, you see that vertical dashed black line. That's our Brexit deadline. That's October 31st. So we are now on October 2nd. We only have 29 days till Brexit. Or do we? We know how this movie has gone so far over the past few years. So we have this target range right there, which you have the low from yesterday, which is in the heart of it. Now that target range is the area from that sell signal that had occurred, that last higher move high, which is where, if you look at the upper yellow pivot point at about 25.82, that high that is right there, this break that we've recently had over the last couple of weeks, the target from that sell signal and from that slide comes right into this target range. So we've already hit the target. So does that mean that we're going to get a rally and the trend's going to continue, the short-term trend to the upside? We don't know, not necessarily. Right now we have the low that was set at the beginning of September, and now we have the beginning of October where we may be setting a higher move low for the longer term if this market is going to remain bullish, which it has been bullish for the past month, but not for the past week and a half. In the last week and a half, you got to remember, Parliament came back online. Boris Johnson has suspended or prorogued, if you will, Parliament, which now they have been has been overturned, and they are back in action. So this slide that you have here that happened over the last week going into yesterday's trade may have a lot to do with that. their volatility for sure would be related to that. Now, it's downward pressure. That could be a lot of things, but I think that it could have been a big profit-taking break because of the fact that whatever was one of the political forces that was bullish for the pound US dollar had collapsed over the last week and a half. But the market has absorbed that, or should have by now. So we've hit the target range, and very likely that over the next few weeks, as we get towards, and you see how we have this black line set there, because that's our Brexit deadline. So as we get closer and closer, it's very possible that we see a sideways trade develop. So I would key off of that low from yesterday, and that's our purple dash line there, to $22.03. Any failure to or a slide that goes below there, not only does it mean that that upward sloping support line that we drew in is not good, which is a failure, but then we take out that low, which means we make newer move lows, which that fundamentally is a technical negative signal. And now where does that leave us? Well, that means that all this rally that we had that was in September that was related to Boris Johnson suspending Parliament and taking the UK in one direction towards Brexit is falling apart. Does that mean that Brexit's not going to happen? No, not at all. It just means it's not going to happen the way that Boris wanted. So that could, now if you look at that scenario right now, it's very interesting that the pound and the US dollar, even though it looks different than the Euro US dollar chart that we just looked at. In fact, let's go back real quick, see how this is trending, and it traded into a new move low yesterday. If you look at today and yesterday, just for the pound US dollar and Euro US dollar on the 2-day basis, they made new lows, they settled positive. They're only slightly lower today when the dollar index is very, very strong. So very interesting, and the fact that the range and their volatility is very tight today leads me to believe that this Brexit situation is going to start to contain these markets. So for you range trade traders, keying off this $1.2311, which is just above where the market is at right now, that's that yellow line. That's kind of like your up and downside pivot. Above there, is it positive? Yeah, but it's kind of then just means you're going to probably establish a wider range trade up towards that $1.2582 and not necessarily taking out that high. So, and then only if we fail from, if we're below $1.2311, which we are right now, that's where we're looking to take a test of yesterday's low. And now where will that go? If it keeps on eroding, well, we could keep on breaking into Brexit. So, but I don't think that we're going to do that. I think that unless there's any major fundamental factors, because we have the dollar index that has been strong and riding highs for a while, and the pound and the euro have only as of the last week and a half really been impacted by that, or at least the correlation would say that it is impacted by that. So definitely for you pound US dollar traders, watch the dollar index as well. Any sell-off in the dollar index most likely will help to give a lift to this pound US dollar. But like I said, it's more likely going to start becoming a range trade as we head towards October 31st. So for the next 3 weeks, the lower boundary may be just above this $1.22 area, and we may be bouncing right around this $1.2311, which is this yellow pivot right here, basically for the next 3 weeks. So for volatility traders, you might be screwed. For bulls and bears, you might get really chopped up. And for those that you look to trade containments, you may have a really good chance of reaping the rewards as we go into Brexit. Now, that's only for these two currencies. And remember, if the dollar index really starts to trend and whatever, then most likely you're going to see a continuation of the bear trend in the euro US dollar, as well as a developing bear trend for the pound US dollar. So once again, key off this elliptical area, and that will be the area for you to watch the most. Now, US dollar Swiss, this is the interesting thing here. So if you had seen this chart already this morning, you know that the market is higher and it took out that high. So this chart was made last night, and yesterday's trading had left a dark cloud cover short-term sell signal. Now, these patterns don't always work. This is a time where you will see where it doesn't work, because if you look at the US dollar Swiss currently, it's actually above parity. So yesterday, the market had just poked above parity. You can see that purple line at $1, which is parity, 0.16. So it had just barely touched above that, made new highs, looked like the bull was in place, and then it sold off in a big way, and it gave us that short-term sell signal. So with that, it had us targeting that lower 98.43 area. However, today the market reversed gears and exploded to new highs, and is currently trading above parity. So the US dollar Swiss trade, this one for sure is a bull, obviously, because we had a sell signal from yesterday that usually is pretty reliable, at least for a couple sessions, and it reversed gears right off the bat today. So, and in a very strong way. So that means dollar strength there's a lot of momentum, because the US dollar the Swiss currency is one of the flight to quality currencies out there. And the key thing about this is that the Swiss, if you look at other currency crosses, the Swiss is dominating. So this is very interesting, because yesterday's sell signal came in line with the fact that the Swiss is running away as a runaway bear against a lot of other global currencies, especially the majors. So it made sense that with yesterday's sell signal that this market would actually start to correct lower. That's why we had the last higher move low at 98.43, that purple line, and that target and critical support area there as our expectations for where the market may go. However, this morning it reversed gears. So this is a big deal. Why am I talking about that? Because we had one direction for bears, and it obviously has been proven wrong. The bulls are definitely showing their strength, and it's giving us a different way to look at these pivots. So originally I had the pivot at the high from yesterday, which obviously no longer is that relevant. However, these two green strike prices, 99.75 and 99.25, do become relevant, because originally they were looking to be potential areas to sell around and use as your risk levels, but since they are no longer risk levels for a bear, now they become risk levels for a bull. So now I would take that into account and watch the dollar index, and as long as that continues to pressure new highs, especially as we move into Friday and unemployment, this freight train going to the upside is one to probably take a ride on. I don't think that range traders swing traders, I think, are going to have a good one with this one. So if you're directional and you're looking for swings, even on a daily basis, obviously there's volatility in the US dollar Swiss. Now there's also a key note here, is that the Euro US dollar, which is typically the more volatile and stronger currency than the Swiss on a daily basis, isn't really moving today. And we have the Swiss, which is like a balloon underwater. You can't see it on this chart, but it's green. It's made new move highs. It's trading above parity. So from 99.30, you have almost a full dollar move that exploded this morning. In the wake of what? In the wake of dollar strength? That's very, very interesting. So that says a lot, especially since the Swiss, like I said, is a major bull against most other currencies. So is the Swiss turning? Probably not, but this is where you need to look at the buffer. If the Swiss is that weak against the US dollar, then the trends from the other currencies are probably going to continue to erode against the US dollar as well. If this trend continues, that is. But right now, I'd be very careful. If you are a bear, wait. I mean, there was a sell signal yesterday, and you can see that today it exploded in your face. So that's also a lesson to be told here, because if you were to be using these 99.75 and 99.25, let's say last night you had put on the sell to use those as sell levels. Obviously today the trade would be wrong, but you would know your risk. It would have been defined. Obviously, it would have happened in less than 24 hours. But that's key information to know as far as the strength and the or weakness thereof of these different currencies. So right now, if you are a US dollar Swiss trader, obviously there's oversold indicators or overbought indicators going off, I wouldn't doubt. We just had a really reliable sell signal that came in yesterday. didn't work. And that's why you always remember, you never try and pick a top or pick a bottom. However, you can trade into moves and trade against moves. There's nothing wrong with that. And this would be a situation where we took a high opportunity moment and it didn't work. But that also gives us other feedback and a reason to have a guide for where this trend is going. So with the US dollar Swiss, once again, for the rest of the week, I would be very leery of being a bear and key off this 99.75 level. Excuse me, and also that 99.25 level as a base should the Swiss fall apart. Now remember, parity is something the US dollar has not been able to hold with the US dollar Swiss. So if the Swiss strength really is there against all these other currencies, this might be a bull trap where all of a sudden it snaps back. So the 99.75 could be a really key strike price to look at over the next 48 hours as we move through the rest of the week. And definitely if we are getting the US dollar Swiss to fall below parity, which is the dollar even mark, then absolutely we might have a correction down towards that upward sloping blue line. And see, that's the thing is right now we're buffering the upper end of a rising channel. That upward sloping blue line has held this trend for quite some time, and it's not outside of the realm of possibility for us to start to come back and at least pull back towards this 99.25 level. Obviously the 98.43 is a huge directional level as we have increasingly higher move lows. So the trend is your friend overall, long-term bull. Short-term could be getting a little toppy. Look for a lot of swing trading. So if you're a range trader, I would be very careful. Directionally, you know your points and use that to your advantage. Now let's take a look at one other currency. Now this is the one where we are getting the true signal. So yesterday we didn't have, we had a typical reversal day. And if you look at, we see here how it says lower move high, this was not a double top. This here high from a couple weeks ago, that is the last higher move high. We established a higher move low, and then now we have established a lower move high. And this, it was a little bit higher last night. Now it is lower and is testing towards this 107.449 level, which is also another key pivot for us. As you can see, the upward sloping part of this channel, this morning it has fallen below it. So what does this mean? We have a rallying dollar index. We have the Swiss that typically has been divergent of the dollar index, especially when the other ones are rallying, are breaking against the dollar. And then now we have the US dollar yen, which today is actually the dollar's weaker. Why is that? Well, the US dollar yen has been in the bear trend overall for a while. Obviously over the past month and a half, as the summer ended and the fall has begun, the market has rallied, but now it's showing signs of at least, well, no matter what, it's becoming a range trade to lower type of situation. So yesterday's high, I would key off that, or actually not that, the high from a few weeks ago at 108.477 for any bullish action. But right now, the market's showing signs of being bearish. We set a lower move high. Today we have follow through that's taken out this upward sloping blue line. So right now we're targeting this lower critical target range. So we have a couple pivots. We have some strike prices here at 108.25, at 107.75, and 107.25. So these would be the areas that for bulls and bears, if you're bullish, then I would look to utilize those areas because as long as this 106.96 area is holding right here, which is in this target range, this was the last higher move low. So if we fall, we've already taken out this upward sloping blue line, which means that the market is at least stalling the trend. And then we have the market that is eyeing this higher move low here. If we take this out, obviously that higher or lower move lows after a lower move high are definitely fundamental technical bearish signals to take advantage of, but that's getting ahead of ourselves. Remember, we have US unemployment, a couple other things going on. We don't want to just say that this market's going to snap into a bear trend. Once again, after coming off this nice little rally, it may be neutral, especially because we're coming into the trade talks next week with China. Or excuse me, not next week, next month with China. So we'll see. We know that that definitely has, just like we have Brexit, there's a good chance the US dollar yen trade starts to set a range, and that may be what it's done. Maybe right now it's setting the upper parameter of the range for this market for the next couple months, or at least the next few weeks, that's for sure. But I think that since we've tested the upper, or set the upper boundary, or at least appears to have done, that any follow through to the downside is going to have us pressuring this little area here. So if you're a range trader, or if you're an aggressive bull, then this 107 quarter would be a key level for you, as well as the low here of 106.96. Any failure from 106.96, then if you're bullish, you're obviously, I think, on the wrong side, and you should be out of any trades looking to buy lower. Oops, excuse me. And then also, if we get a rally above 107.75 today, which would put it back to where it was earlier last night, then that gives us a chance to ride this upward sloping blue line and put us back on track for a neutral to higher trade. But I don't think that's going to happen, because right now, since we have dollar strength in the other markets that are showing very strongly, except for, like I said, the pound and the euro, you would think that they would be pushing those extremes again, which they are not. So perhaps we are coming into not necessarily a reversal of trend, but maybe we're all hanging on this unemployment number on Friday before we start to spark a direction. So remember, that is coming out, so we can start to wind the coil and start to get tight. But this is very interesting to see that the US dollar is actually weaker versus the yen. So today's dollar index action could be very, very big to watch. We have the US stock market that is now opening, so we're going to have a little bit of balancing of money over the next half hour to hour. So let's see what happens with that. And key off the dollar index. Any big reversal of gears there would help to lift the other major crosses, especially. But I think the US dollar yen trade is something to really look at as far as pressuring those lower boundaries. So the other ones, we know we're coming into a totally different outlook. But with the US dollar yen, the trend is your friend, and right now it has been higher for a medium term. Short run, it looks like it's starting to get choppy and reversing gears, so lean on the bearish side of things right now, and I think that yesterday kind of helped us set the upper end of that range. So key off these pivots here at 108 quarter, 107.75, and 107 quarter for your bulls and your bears. And for your range traders, if you're looking for a containment trade, which is very likely, but remember, we have that critical target range still to settle into. So we already know we've taken out the 107.49 level, and now we're probably looking to take a test of this 107 quarter down towards this other low over here. And trading down there doesn't necessarily mean that the bears are going to start to jump on the freight train here. It could, like I said, just be establishing a range trade, that, because just like we have Brexit happening, we have the China deals that are coming, and they both are coming into a deadline of mid-October into early November. How ironic is that? That on two sides of the planet we have major geopolitical focuses coming into gear. So the bulls and the bears as a whole may start to have a little trouble. But right now it looks like the swing traders are having a fun time with the US dollar yen, and we're definitely looking to press the downside. So key off those key pivots once again: 108 quarter, 107.75, and 107 quarter for the rest of the week. And definitely any type of rally that takes out the high from yesterday would definitely mean that the US dollar really is strong. But I don't believe that that's happening. I think we're ready to start to get a pullback eventually, or at least a sideways trade for the dollar index. So with that, do your homework. Always look at the markets and weigh your potential trades. Have a trading plan and stay the course. I'm Teddy Kekstadt from Forex Trading Unlocked. You can always find me at www.forex-trading-unlocked.com, and you can find us on Twitch TV, StockTwits, and LinkedIn. And also, like we had a couple Japanese candlestick patterns there. I wrote a book called High Probable Japanese Candlestick Patterns. You can get it on Amazon. It's available on paperback and Kindle, and you can use it to utilize the best buy and sell signals used for over 400 years to give yourself a competitive edge against the markets. And just like we showed today, we had a sell signal yesterday and it didn't work. They don't always work. They're not always 100%. but then sometimes they do work. A lot of times they do work, and they also can be used for knowing your risk level. So even if you're not trading them, you can use them as a buffer for protecting yourself. So with that, thank you very much for your time today, and for the Nadex for sponsoring us. We will see you next week.